Hey, good morning, options traders. Welcome back, everyone. And I wanted to talk a little bit about a really important concept for all of our new traders out there, and that is the number one thing to check before placing a trade. Any trade, at least when it comes to options. And what I'm about to talk about, I've done in previous videos in more complicated contexts, things that professional traders would look for, but I want to put it in a really simple context. It's a way to at least give yourself a little bit of a safety net to see if you're on the right track. And you see, the problem is with traders, new traders, is that they often think that the market is about what do you think is going to happen? And if you're right, that you win. So for example, let's say that we're looking at a game of chance and I say, pick a card. And you say, okay, I don't know, maybe it's the 7 of clubs. We turn it over, it's the 7 of clubs, you win a prize. Or maybe you say, oh, I think it's going to be a heart. We turn it over, it's a heart, you win. That's how most games of chance are done. You play the lottery. Here are the 6 numbers I think are going to come up. If they come up, you win. And to a large degree, that's the way the stock market works. So people come from trading stocks into the options and they carry the same mindset over. So in the stock market, they say, well, I think the stock is going up. I'm bullish. Fine, buy the shares. And if you're right and the stock goes up, yes, you win. You're going to make money on that. Or you might say, well, I think it's bearish. I think the stock's going to fall. Well, you might decide to short shares, and if you're right and the stock price falls, you win. But again, all of these things center around what do you think is going to happen, and if it happens, you win. But that is absolutely not true for the options market. So yes, in the options market, you can certainly have outlooks. You could be bullish, you could be bearish, you can be neutral, something you really can't do in the stock market. So we do get a lot more flexibility in the options market, and the reason for that is time value, or the extrinsic value. And it's this one piece right here, this time value, that starts to complicate things. And this is what makes it no longer true that the options market is just about what do you think is going to happen. So to put it in a simple context for our new traders, what is the number one thing you should consider? Before you place that trade, ask, is there a reason other traders think the same way? So for instance, you say, oh, I think ABC stock's earnings are going to be great. Well, why did you think that? Well, it's plastered all over CNBC. It's all over the financial news websites. Everybody's talking about how good the earnings are going to be. Fine, stop and take a pause. If other traders think that way, it's probably factored into the price, and now you need to be careful. It's no longer a game of what do you think is going to happen. So asking this one question can at least make you take a pause and say, you know what, maybe I need to reconsider my strategy. So the same idea happens in, let's say, football bets. Let's take a look at the last Super Bowl. 55, we had Kansas City and Tampa Bay. And you might say, you know what, I think Kansas City is going to win. Well, it's not true anymore. You cannot do this because there is now a point spread in the betting world. And let's say Vegas at the time, I think, was a 3-point spread against Kansas. So if you bet on Kansas, you had to give up the first 3 points. That is exactly how the options market works, and for exactly the same reasons. So you might look at that and say, yeah, I think they'll easily beat 3 points. Okay, fine. Now you should go ahead and place that bet on Kansas. But what if that point spread was 7? Would you still feel the same way? What if it was 12? What if it was 20? Do you see what's happening? Is that even though you might believe that the team is going to win, you have to look and say, yes, but the point spread is too big, and I therefore don't want to place the bet, or place it on the other team. But you have to account for this point spread. See, you don't have to do that in the stock market. You don't do it in lotteries. You don't do it if you're trying to guess the turn of a card. But you do have to do it for sporting bets because of a point spread, and you have to do it for the options market because of the time value. So you see, in the options market, price is the equalizer. Price acts as a point spread. So if all traders believe, let's say, that earnings will be great, the price is going to rise. So here's what could happen. Let's say that a $100 call is normally trading for 3 under normal volatility and under normal conditions. But now earnings are coming out. And not only are they coming out, but they're expected to be unbelievably great. Well, who wants to sell this option? Everybody's out there to buy it. And so the price starts to rise, and maybe it goes to 4, and then it goes to 5, and then 6 and 7, and pretty soon it's trading for 8. And then it's going up to 10, and then it keeps going up to 12. And so what happens? You come along and say, hey, I heard earnings are going to be great, and I heard you should buy a call if you think the earnings are going to be good, so let me go buy this call, because this is what I think. So what's going to happen? Well, let's say that the earnings come out, we turn over the card and we say, yes, earnings are great, market reacts, and the stock goes to 110. What's the $100 call worth? It's worth the intrinsic value, assuming we're pretty close to expiration. But all of that extrinsic value comes out. So that option might be trading for $10, maybe $10.50, $11, but it's probably not going to be 12. And so you paid 12, you sell it for 10, you're down $2 on the trade, even though you were 100% correct about the earnings being great. So why did you lose here? Because you simply acted on what you thought was going to happen. You never considered the point spread. You never asked, is there a reason that all other traders believe that earnings are going to be great? And if you sat back and said, you know what, I think everybody thinks earnings are going to be great, you need to reconsider your strategy. And this is where professional traders start getting into the gamma. So if you have a positive gamma strategies, you need the stock price to move sufficiently far to make up that extrinsic value. Notice those key words. It's a need. So how do you get positive gamma? By buying options. If you buy a call or you buy a put, you do need that stock to move in the correct direction, but it also has to move sufficiently far to make up for the extrinsic value. In other words, you have to beat the point spread. So in a lot of ways, it is like betting on a football game. You have to ask, what do you think the crowd thinks? But let's say that you feel that the point spread is too big, or maybe you just don't even want to try to make an opinion on that. Well, this is where negative gamma strategies come in. You see, negative gamma strategies don't need the stock price to move. They just can't have it move in the wrong direction, but we don't need it to move in the right direction. And if it does move in the right direction, we're still not going to get hurt. We'll still make money. We're just going to have a limited amount. But that's a whole lot better than a loss for being right based on what you thought. So I hope that helps. For everybody who's new, always ask, if you've got an opinion on what's going to happen in the stock market, whether it's the overall indexes or a particular stock, always ask, is there a reason to believe that everybody else in the market feels the same way? And if that's true, you need to be careful about buying options just because of what you think. So for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new technical analysis course. It's all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.